Good morning, everyone. This is Financial Literacy 101. And today, if you're thinking about a stock, you're thinking about a mobile stock that brings food to your household, and you're trying to figure out which stock is more profitable. Is it Uber Eats, that's roughly at $50 right now, around $51 per share, or is it DoorDash, which is around $150 per share? Then you might want to hear what I have to say. Good morning to all. And today, the thing about that makes Uber, in my opinion, already more profitable than DoorDash, as this was released, I think, late last year, is the things that Uber Eats is absolutely involved in versus DoorDash. DoorDash came out the gate one of the highest. And believe me, I'm a big customer of DoorDash, and I like DoorDash over Uber Eats. But when it comes to investing, Uber Eats, in my opinion, is more profitable. And I think that is very, very imperative to note that we should get inside this information and see where our money best serves us, okay? So when it comes to this, when I'm looking at Uber Eats, let me show you something here. Over the past 5 years, which Uber Eats only came out back in 2019 at $45 a share, Uber Eats is now at $50 a share. Now, granted, it was up higher than that at that particular point. Over the past year, Uber has been 48.87%. The past 3 months has been down 5%. The past month has been down 8.3%, which is great for investors. And we should absolutely to invest in stocks that are at the low point right now. Now, it's been up almost just a little bit over 1% for the past month. And then today, let's see where it's at. It's roughly at 0.10% of a percent, okay? But here's which makes Uber very, very profitable over DoorDash, in my opinion. Now, let's look at this. Now, Uber Technology operates as a technology platform for people and things mobility. The firm offers multimodal people transportation, restaurant food delivery, and connecting freight carriers and shippers. It operates through the following segments: rides, eat, freight, and other bets. So currently, right now, ladies and gentlemen, you see the different industries that Uber is already in. And I know I'm saying Uber Eats against DoorDash, but if you're trying to figure out what mobile app or what eatery as far as investments are concerned, then Uber is your best bet, in my opinion, versus DoorDash. Now, we're going to get into DoorDash as well. You're going to see the high price tag that DoorDash is currently at. But what you're not going to see is the amount of money that is already lost, okay? And we're going to see that over time, unless DoorDash do something astronomical to make their stock more valuable, Uber is still your better chance. Let's get back into it. Okay, so this is that the ride segment refers to products that connect consumers with ride drivers who provide rides in a variety of vehicles such as cars, auto, rickshaws, motorbikes, minibuses, or taxis. Because here's the thing. When you guys are overseas and you're in Thailand, this, that, and the other, and they have Uber, you might be on the back of a motorbike. I should know. I was on the back of a motorbike, and I'm like, I'm too big for this. But nonetheless, the Eat segment allows consumers to search for and discover local restaurants, order a meal, either pick it up at the restaurant or have the meal delivered. The Freight segment, which a lot of people are not aware of, the Freight segment leverage proprietary technology, brand awareness, and experience revolution industries to connect carriers with shippers on its platform, and gives carriers upfront transparent pricing and the ability to book a shipment. So Uber is into all of these three very, very large, especially with the delivery service, upcoming industries. And at $50 per share, very, very profitable. When I'm looking at what the analysts are saying here, the analysts are saying that at a median price target, at a median, meaning that that's the middle point, $74 a share with a high estimate of $85 a share. $85 a share, but we're going to get back into it. Let's see what the comparables are here. As we're looking at this, there's no dividends yet, so you guys don't worry about that. And Uber's been around since 2009, okay? Here are some of the relating industries that Uber is in. They're in consumer sales and retail, industrials, restaurants, transportation, and also construction services, okay? Here's some pertinent news that they listed on Robinhood that you guys may want to look at. You see Uber sees gradual return of U.S. drivers, meaning that more and more people are being hired on. Uber drivers win their first ever unionization deal. I guess they're going to be unionized here. Uber UK drivers gain collective bargaining with the union recognition. And look at this right here. This is what analysts on Robinhood are saying. Buy at 88%. Buy at 88%. That's 42 analysts, okay? We see hold at 9.5, sell at 2.4. We won't even get into what the bears and bulls are saying because already right here, this is one platform, and we're going to go over to CNN Money. We're going to see what they're saying, but I'm pretty sure they're going to say buy as well, okay? And this is one of those stocks you keep long term. Uber's not going anywhere, okay? Here's some of the industries like Lyft at $57, Facebook, Microsoft, Disney, and I've done the whole comparison against Lyft as well as Uber, but let's go back. Now, again, don't forget the median target for Uber is $74 with a high estimate target of $85 per share. So let's get into DoorDash. So currently, as we're looking at DoorDash, ladies and gentlemen, they just released back in December 9th, 2020. And I know what you're saying. They just came out. DoorDash came out at $182 per share. Wow. I'm talking about that is a lot of money, okay? But now that you currently see their price, it's at $153. So they roughly lost what? $30 per share. Now, granted, wouldn't you think during a pandemic where a lot of people, we're now getting back into a restaurant. Some of us are still social distance. If you live here in Texas, then it seems that nobody is wearing a mask. Like, I went inside a couple of shops yesterday and nobody was wearing a mask except the people that work there. But that's besides the point. The point I'm getting at, it has dropped $30 since it has came out on its IPO release date. It's dropped $30, okay? But we're going to get into why I don't believe that this stock will make you more money than Uber. Uber, in my opinion, in my perspective, will make you more money over time than DoorDash. Let's get into it. So the past 3 months, they've been down 10.6%. The past month, they've been up 7%. The past week, they've been up 11%. The past day. Now, already what I want you to look at is this high price tag that DoorDash has. Already. And let's see, do DoorDash operate in the same segments and industry as Uber? Don't forget, Uber is in freight. Uber is in mobile eatery. Uber is also in is a technology platform. So don't forget the technology space. And then also Uber is in rideshare or riding you around, or, you know. So they're in all these different segments and industries that they're doing fairly well in. Okay. So it says here that DoorDash engages in the design, development, and operation of a food delivery and logistics platform. It serves consumers in the United States, Canada, and Australia. The company was founded by Andy Fang and all these other gentlemen back in 2013. So already what you're seeing is that they're only into consumer service and retail and restaurants. But when I look at Uber Eats and I look at the segments here, look at the industries here, transportation, restaurants. So it already has it beat. So when we look at all of the industries that Uber is in, we're looking at large industry compared to DoorDash. Let's read the news here. It said Bed Bath & Beyond, okay, after a partnership with DoorDash for same-day delivery. Okay, this is promising. This is good news that just came out, because when you look at it, DoorDash has to expand to support that high price tag of $182 on this IPO release. Now, if you're telling me already, you're like, well, I understand that Uber is a cheaper stock at the current moment, but will I make more money with DoorDash? I don't believe so. They're going to have to expand enormously because Uber has been growing and has grown very fast in a very short period of time. And that's what you need to understand. So you're going to invest $150 or you can get 3 shares of Uber at the same share price of one. And I know what you're saying. Well, what's the projected price over the next 3 to 5 years? Now, when we come to those particular predictive forecasts, I'm expecting Uber to grow even more and be a very intricate part of the United States infrastructure when it comes to freight, when it comes to mobile eatery, when it comes to rideshare and things of that nature, where DoorDash is just into food. I think they will have to really grow their market. Now they're talking about same day delivery, okay? Because DoorDash can be anything delivering to your door. But don't forget, a lot of us use Uber, a lot of us use Lyft for all these different things. And at the end of the day, I'm going back to Uber Eats sometimes because DoorDash don't have the same restaurants, or I'm going over to Grubhub. But the point is that Uber is fitting well in all of these 3 markets that DoorDash is only in one. Because Uber Eats is now doing freight as well. They're doing stuff door to door. So we have to look at the overall potential and the projection over time. Okay. And again, I'm not just saying, oh, don't invest in DoorDash. I'm just saying I believe you'll make more money over time with Uber. Now, again, you want to spend $153 right now, down from the IPO price of $182. I'd rather buy 3 shares of a stock that I know in my heart that will go up to around $80, $85 a share versus a stock that may reach. Because here's the thing. What are the analysts saying about DoorDash? What is the projected amount? So the median target, what analysts are saying about DoorDash is $165. And they're saying with a high estimate of $195. Now, I want you to think about the value here, ladies and gentlemen. I want you to think about the value, because when I look at the value of these particular stocks, DoorDash came out at $182 per share. And they're saying with a high estimate of $195. So what's that? What, $12 versus Uber right now? If you buy it at $50 and it reaches $74, you're going to make a profit anywhere from $25 to $30, especially if you reach up to $85 per share. So these are some of the things that we absolutely need to look at. Now, let's go over to CNN Money and let's see what the analysts over there are saying, because I think it's very, very pertinent. We're going to look at both of them. We're going to look at DoorDash, and I'm not biased. I'm just looking at the numbers. I'm looking at the projections, because I believe that, hey, if I'm going to invest $150, I want to make sure in the next couple of years, I want to make some really good money off of that. Anyway, so here we go. So when I'm looking at what the analysts are saying are here, and I'm looking right here, ladies and gentlemen, 36 analysts offering 12-month price forecast for Uber Technologies, again, with a median target of 74, okay, and a high estimate of 85, okay, and they're looking at the historical and then the forecasted projected amount. Now, granted, I see what you're saying when we're looking at when the projection that at one point the price point was down roughly below $50 per share, and then it rose up. So let's get a better projection here. Let's do this. Let's get a better graphical representation. So at one point, Uber was up at $63. So again, the high estimate is $85, still looking with a $22 profit if that occurs. And this is with the projected low price. Now, we're also looking at the low of $30 per share. I believe that's unlikely unless there's some sort of market crash or market correction. That's the only way I can see Uber really dropping that much down, okay? So the analysts here are saying what? They're saying buy. They said the current consensus among 42 poll investment analysts is to buy stock in Uber. This rating has held steady since May when it was unchanged from a buy rating. So they're still saying buy, okay? And you can get into the sales and the reporting date and the other earnings shares and growth. You guys can look at this for yourself. I don't want to bore you. I'm just letting you know this is where the information is, okay? So when we're looking at these two and we're trying to compare them to, again, I'm liking Uber, and I know I'm being biased at this point. I wasn't at first, but I just want to make the point that I'm not saying you can't make money with DoorDash. I'm not saying that. I'm just saying I believe you can make more money with Uber over time, okay? So here's DoorDash. When I'm looking at DoorDash, I see that year to date has been up 7.5%, okay? Then right now, the current stock price is $153.53. Now, what the analysts are saying on here, again, I don't see a rating. It said forecast have a median target of 165 with a high estimate. And we're looking how DoorDash came out. You see this spike here? Let me just blow this up a little bit more for you guys. We see that spike in the projected forecast there. And guess what? They have not bounced back yet. Now, they do have a high estimate of 27%, but don't forget that this stock actually came out when it first was released at $182 per share. So again, you could roughly make, $25, $22 to $13. I think you would like to buy in low at a lower stock and make more money, double the money than buying in at a higher stock and potentially only making $10 or $12. And this is why I'm saying that I just believe that Uber is better. And when you compare it to Uber Eats to DoorDash, it's a no-brainer. See, the thing is, a lot of us like, well, Uber is in all of these markets. Yeah. So you are essentially triple investing or quadruple investing because Uber is in technology. Then you have Uber Eats. Then you have rideshare. And then you have freight. DoorDash is into mobile delivery for eateries. They're now trying to get into Bed Bath & Beyond. So I guess when you guys want to get new sheets or anything like that, you can order right from the door. They're going to have to do that in order to keep you guys money for investments. Let me get back here. So let's say what the analysts are saying about what we should do as far as buying this particular. So right now, as you can tell, the analysts are saying the current consensus among 21 poll investment analysts is to hold stock in DoorDash. This rating has held since May when it was unchanged. You know why they're saying hold? Look, earnings per share is down, which is not bad, okay? The earnings per share is just an indicator to let you know how that stock is performing, okay? Okay, so this is at 50 cents. This one's at 7 cents. And again, earnings per share is an analytical tool to let you know if the company is operating out of debt or not. So that's basically it, okay? But again, as we're looking at it, the analyst on DoorDash says what? They're telling you to hold, because a lot of you invested in DoorDash and you lost and you're losing. That doesn't mean that the stock will not bounce back, because again, the projected is saying that at a median, it's at least it's going to bounce back to $182, $185 a share. And if you hold it on long enough, it's going to reach even 195 shares. Now, granted, DoorDash could absolutely blow up when they start making all of these large contracts with all of these businesses, Bed Bath & Beyond, or any other place that could Target. What if they start doing stuff from Target? Okay, and I think does Target have their own delivery? I don't know, but if any company can do something like, take for instance, Walmart. If Walmart got into bed with DoorDash and they say, hey, Walmart, we know you have delivery, but we can do it cheaper and faster, then Walmart will be in contract with DoorDash, and then their stock will skyrocket, because Walmart is a huge organization. It's a huge business. So I can see all the retail in that. So that could make it profitable. But they're going to have to do something astronomical other than Bed Bath & Beyond to get over that 200 price point. And the downside of that is if Wall Street Bets Group start going and playing with DoorDash or Uber, then none of these projections or this stock review you're getting, it's not going to mean anything, okay? Let's see here what people are saying. We got Edward Bill. He said DoorDash hit hard, diluted the lockdowns, but nationwide customer service complaints and being limited to number one service is hurting them now. Yes. Let me tell you something. Anytime you're in the business of dealing with people, like Amazon don't really, believe it or not, Amazon really doesn't deal with people. You go onto the Amazon website, you click the item, they ship it to your door. The only interaction you're going to have is with that, door-to-door service, okay? And what Amazon would do, let me tell you what Amazon would do, because I've been dealing with Amazon. I've worked for Amazon. Is when you receive a product, and the product is not what you expected. The product is broke. The product came damaged, whatever. Your first initial emotional thought is to be upset with Amazon. Amazon, like, we didn't create this. This is not the Ring. This is not an Amazon Fire Stick. This is not a Alexa product. This is something you just order off Amazon. So what Amazon goes and say, okay, we're going to contact the manufacturer. We're going to contact them for you. We're going to make sure that they can replace this, and you get the customer service rep, and they're doing all of this stuff like that. But automatically what they're telling you is this is not Amazon's fault. So automatically your emotions change to, man, that company makes a really horrible product. Amazon is just an e-commerce business in this segment. I mean, of course, Amazon is in technology, robotics, and all these other things. But for this particular product, they're just the middleman. They get it from them and they ship it to you. So when it comes to DoorDash, you're directly relating your emotions to the service you're getting and plus the food. The DoorDasher was late. My food is cold. They didn't cook my food right. So everything has been banged off what? DoorDash and the restaurant that you got the food for. So those are some things that you really need to keep in mind. Let's see here. We got Lakeisha C. She says, good morning and greetings. DoorDash also delivering for Walmart. Okay, well, thank you. I did not know that. And tell me, now that DoorDash is delivering for Walmart, it makes it more profitable. But again, I still believe that Uber is better for your money. Again, DoorDash will have to do a lot more contracts. DoorDash will have to do a lot more deals when it comes to shipping for the middleman to reach where Uber is going to go. And again, like I said before, they're down $30. Uber is down, what, $12, $13 from its IPO. Oh, no, excuse me. Uber is up from the IPO. The IPO was around $45 per share. They're up 50, but they're still down. But look for Uber to reach that $85 price point in the next year or so. And again, you can buy 3 stocks of Uber and only 1 stock of DoorDash. This is Financial Literacy 101. Learn money and be inspired. You guys have a great Monday. I'm out.